You tell me already.
You tell him we already.
You're live.
Okay. Hi, everybody. It is March 6th. This is a special Finance Committee meeting at the Chancellor Center in Wilson Rock. I am Tracy Osecki. I'm going to ask for a roll call.
Nicole Collins, School Board.
Jutta Pali, School Board.
Bob Hickey, School Board.
Matt Federickson, Director of IT.
Andrea Mangle, Director of Communications.
Tony Rapp, Director of Business Administration.
Andy Sanko, Superintendent.
Joe Hidalgo, School Board.
Ann Horner, School Board.
Linda Stone, School Board.
Okay. Take it away, Mr. Rapp.
Okay, thank you all for taking time out of your busy schedules to come out here and talk about the budget. And thank you, Ms. Osecki. The first thing, I'll turn it off. The agenda for tonight, I'm going to talk about the assumptions on the budget. Go over some preliminary numbers. I want to make sure everyone understands that this is very early in the budget process. We were able to put together a set of numbers, but there's some things that are not completed yet. Like we have all the contract work done on the salaries, but we do not have. There are some individual jobs that change from year to year that we need to add yet. And we're working with Human Resources to do that. Putting the salary budget together is a very long process. Then we're going to talk about government finance and some of the things that go on with our revenues and expenses that I apologize if it's something that you already know, but I just want to go over these things to say how they affect Council Rock and what control Council Rock has over some of these numbers. So the first thing is the budget conditions and assumptions. First, we usually budget conservatively here at the district, and that means that if we have a choice between adding an expense and not, we will add it, and if we have a choice between increasing our revenue or not, we will not increase it. Basically, for example, our basic education funding that we get from the state, their budget right now calls for us to get $1 million increase. We won't find out what that actually is until well after our budget passed, most likely. So I don't put that in the budget. I budget us at what we are at this year for that column. Again, these are early preliminary numbers. Retirements and replacements are not factored in. So there's a savings to be gained when someone retires and they're replaced with a new teacher because they are at the top, usually at the top of the scale, and the new teacher comes in at the bottom. The benefits might be different. Instead of having a family benefit, there'd be a single person or a couple. And it uses an early benefit projection for our healthcare. We got one from the healthcare company, and it's kind of not close enough to make any changes based on it. We are getting a later projection coming in mid-April, and that's the one that we'll use. We will also at that point talk about the use of the Internal Service Fund to reduce the amount of any increases in healthcare premiums, because we had another increase in that fund last year. And as of right now, it looks like we'll have an increase this year. Even though last year, even though we budgeted for this year to decrease that fund, it looks like we're still, our expenditures on healthcare are doing much better than expected. So they're much less than expected. This budget is neutral on positions. There's no positions added. Like I said, there might be some positions that need to be added as to compare it to the current budget. And there is no tax, it's neutral when it comes to a tax increase. So the millage rates that are used are based on the 23-24 tax rates. Real estate taxes does increase because we had some significant construction, and a lot of our assessed value increased by close to $9 million or over $9 million. So, whatever that translates to in taxes. I did add this year, I added a reserve account of $500,000 because we had such a difference in budget last year, we took that out as one of the cuts, but I put that back in to say, that, you know, that's money that we don't budget to anything specifically, but say we have an expense that we didn't budget for that we need, we have that reserved for that, or if we have expenses that go over in a certain account, we have additional funds to cover that. And this does include school resource officers at both middle schools. That's something that we're looking at doing. Wanted to get that in there early, so we do have that budgeted for, it's about $106,000 per school resource officer on the school district. So here's the preliminary budget. You can see I have the revenue increasing by about $6.6 million based on conservative budgeting up to $272 million. That's an increase of a budget increase, not an actual increase of $6.6 million over last year. Salaries and benefits increased by $3.1 million. Again, that's probably the one that's most likely to change. If it's going to go anywhere, it'll probably increase a little bit. That right now, that's a difference of $3.1 million, and that is just the contract increases. So that's about 1.6%. And the 300 to 900 budget, those are we'll go over them later on in the presentation, but those are our expenditures related to non-salary and benefits in the schools. And that increased by $4.6 million. So at the end of the year, right now, we're projecting a deficit of $3.5 million. That's pretty close to what we budgeted for in the current year, 2.3, and it's only off by $1 million. But you know, obviously, as I want to stress that these numbers will most likely change, but we do have a good amount of, I think we're in a much better position budget-wise than we were last year. Any questions on this?
Can I ask
Sure.
what percent of your salary is benefits? What's percent of total payroll is benefits, do you know?
I think it depends on the employee. A teacher, a teacher is about $77,000, and 49 of that is salary. So the cost per teacher is about $77,000. A new teacher,
That's a brand new teacher.
yeah, brand new teachers, $77,000 and $49,000 of that salary. I don't have that exact number, and it changes from year to year.
So you would know the per employee benefit cost, health benefit cost.
Per employee, no, I mean, we have such varied, we have a lot of different plans. And
Usually there's
Yeah.
there's usually a benchmark number for each kind
Yeah.
of plan that you have.
it changes, it changes, and I'm waiting to get that from our
Oh, yeah.
broker, so, okay. So just to go over as we work through the budget, I want you to be aware of some important numbers. A millage increase right now of 1% is equal to approximately $1,767,450 in additional real estate taxes. A 1 mil increase is equal to approximately $1,288,636 in additional real estate tax. And the reason it's not equal to the millage is because we do have we have to factor in non-payment. So there's we usually have a collection rate of about 97.5%. So that's that other 2.5% that we're not planning on collecting in this year. You know, because of the way real estate taxes work, we usually always get our money eventually. But and the cost to add a new teacher with a bachelor's degree in 24-25 is approximately $77,493. So that's what we're calculating as a new teacher, and that's a bachelor's degree position. And I apologize for the typo. 77. Any questions on this? And I will provide the slides after, so everybody would have a copy of it. So the first thing I want to talk about is our revenues and go over how they work and how they affect Council Rock School District. So the first thing I want to talk about is local revenues. And in the budgeting system, the state budgeting system that we use from the state, they're usually called the 6,000, so they're all function 6,000. We have the various taxes, the real estate tax, the transfer tax, the earned income tax, occupation assessment tax, other taxes, and return on investment. Those are the biggest revenues that we have. We do have some smaller things like, gate fees and stuff like that, but these are the ones that really make up the majority of our revenue. The real estate tax. So this is the most important thing that we have. It's our largest revenue source. It's also our most controllable revenue source. It's based on the assessed value of real estate, and the assessed value for tax purposes is the actual assessed. So if you have say you have a $500,000 home or property, you take that value and divide it by the common level ratio of Bucks County, which is 14.93%. And that's why you see like people have big homes, but they're assessed at $35,000 or something like that. The tax rate is called the millage rate, and that's what the board sets that millage rate. And millage is the amount of tax per $1,000 of assessed value. So if our millage rate right now is 137.1567, if your assessed value is $35,000, you would multiply those two together and divide by 1,000, and the real estate tax on that property would be $4,800. Setting the real estate tax and setting the millage rate. The millage rate can only be increased by the amount of the Act 1 index, and the only way that there's only a couple ways that you could exceed that Act 1 index. The first way is to have a voter referendum, go out to vote and say that we want to raise taxes by this much. And obviously for 24, 25, we already passed that, but 5.3%, I think we talked about that back in December, that that's not something that I think we need to succeed, to exceed. If you don't want to go out to vote a referendum, and I know one of our neighboring school district or school district in the next county over, I should say, recently lost the referendum. There are exceptions that you can use to exceed the Act 1 index. So that is if your budget is not balanced, you can apply for one of these to add additional funding to your to additional raise your taxes by these amounts. The first one is school construction debt, and this is mostly related to older debt from before 2006 that or debt that is voted on by the taxpayers. You can ask for additional. You can ask for money to pay that. To increase taxes for money to pay that debt. We have no debt like that at all, so we can't apply for that. The next one is an increase in special education expenditures, and it's if our special education expenditures increase by the amount of the increase between 21, 22, and 22, 23, we could apply to exceed the Act 1 index by that amount. But it's not really that much money. Our special education expenditures are, we do spend a lot on that, and they're pretty steady expenditures. They always go up, but not that much. Or I shouldn't say that, but they go up, but the right amount. And retirement.
Not more than 5.4%?
No. But you could go more than 5.3%. So it would be saying you could go up to 5.3% of the tax increase, and then add to that the increase in special education expenditure.
And you said we don't have a reason to do that.
We don't have a reason to do that, but it's something we could do in the future, especially if expenditures continue to go up, and there's but that what does require us though to have a budget prepared by January or probably February. The Act 1 index timeline is moved up because of the presidential election, because it has to be ready. Everything has to be ready for election day if you want to file any exemptions to exceed the Act 1 index. And then the next thing is retirement contributions. If the retirement contribution that we're expecting to finish with this year is exceeded by what we intend to finish with to have next year, we can increase over the Ackman index by that amount. However, the retirement contribution rate for the school district this year is 34%, and next year it's 33.9%, so the rate's actually going down. So it's likely we wouldn't even exceed that amount. And I did want to talk about, just for a second, about the multiplicative effect of tax increases. I would recommend that it's hard in this day and age to have a year where taxes aren't increased, because you lose that, especially with the Ackman index, you lose that effect for the next year. Remember, every year that you increase taxes, the following year, you know, that factors into your increase for that. So there's a multiplicative effect, and the system's kind of designed that way now to work that way. Our costs are going to go up every year, so we need to make sure that we can fund them. Just to show you, here's the historical Act 1 index for the last 10 years. It started at 1.9%, and then was pretty steady through the late teens, and then started going up again in 21. And now it's at 5.3, which is the highest. It goes back to like 2002, but I didn't think we needed to go beyond that. But this year it's 5.3, which is the highest. Next year, or not next year, over the next 4 years, the Commonwealth of Pennsylvania Independent Fiscal Office, which is basically is a state government organization that their job is to predict future revenue rates, and they're saying that our Act 1 index over the next 4 years should be 4.0, 3.6, 3.2, and 3.1. So they're predicting that our Act 1 index is going to increase. So 5.3 is a pretty high amount for this year, but keep in mind that they're looking for that Act 1 index to go down in the next several years. Any questions on that?
Oh, no, never mind, it was the previous slide. Okay.
Did you want me
We
to go back?
can't do any exemptions this year, we already said we won't go
Yes,
over.
we can.
Okay, just wanted.
Sure. The next tax I want to talk about, that's all I have on real estate taxes for now. The next tax I want to talk about is the transfer tax. This is the tax collected by Bucks County for the sale of real estate. We are sent our portion from the county, so we don't collect it. And this is a revenue we have little to no control over. It's based on home sales. If homes are, the more homes are purchased, it's based on the value of the homes that are purchased, and the transfer of property from one person to another. So, we don't really control this revenue. The next tax is the earned income tax. It's the tax on 5% of earned income of residents of the district. It's determined by the salary of the residents. The rate can only be increased by a referendum related to the occupation assessment tax on the next slide. So the 0.5 rate that we have right now, really, we're not allowed to change that unless we have a voter referendum. Oh, I'm sorry.
When you're done. Well, when you're done, it's not a question about that.
It's collected by the Keystone Collections Group. That's the state determines what, or the counties, I guess, determine what company collects the taxes. And again, this is something we have little to no control over, other than the salaries we pay employees who live in the district. But
this question was raised before, and I don't know where it is, where it goes, or how to go about it. As you look at the property taxes, especially those of the seniors who are living on fixed incomes, there's been talk about possibly, why wouldn't we look into raising the earned income tax and taking a greater percentage of that money, and then that way being able to freeze the property taxes of the homeowners? I don't know how you go about that, if that's something that's even possible, and what kind of money that would look at. That way, the people who are getting taxed are the people who are actually making more money. So the more money you make, the more money you're getting taxed, as opposed to a senior who's living on a fixed income, and his real estate taxes are going up every year. I don't know if you were here when that conversation started. I don't know how to get it started, what would need to be done to look into that.
Well, so there's a couple things on that. The earned income tax can be increased by replacing the occupation assessment tax. That's the only avenue that the district has to increase earned income taxes. And the thought process is that earned income tax does grow from year to year because as people earn more income, as their incomes go up, they pay in more taxes. The occupation assessment tax, which I'll go over next, does not really increase. It's a flat tax on your job title. So, and the problem with the occupational assessment tax is if I'm an attorney and I'm making $1 million a year and another attorney is making $100,000 a year, they pay the same tax. So that's why, in other school districts, it's faded out. The only way that you can do that, so what you do is you're allowed to pick, there's a year that they give you that you can increase your earned income taxes by the amount of, by a rate to get you what you would have gotten in occupational assessment taxes in that year. And if you have to then go out to referendum on that, and Council Rock School District has gone out to referendum on that twice and lost both times. And the referendum, I shouldn't say lost, but the referendum failed. And that's why we still have the occupational assessment tax. So and that's really the only avenue to a school district to increase the earned income tax. The part of the point I'm making with these slides is that the only real avenue that the state gives you to increase your revenue is your real estate taxes. Everything else is kind of frozen or at the will of the state. If you ask how to get that increase,
You had to go through your local government.
go through your legislators.
Yeah, because I mean, so say for example, we pay 1%, we get half. If we raised it to 2 and we got 1,
Yeah,
I don't know what that equates to a dollar figure, how it mitigates the real estate tax. But I guess if we wanted to pursue this avenue, I need to start talking to my local governments
yes.
in Newtown, Wrightstown, and Northampton.
Yes, because right now, this is what we have, and this is what, and we can try to get, if the board wants, we can try to have a referendum added to the ballot again for next year to get rid of the occupational assessment tax. Believe me, as the people who help, in charge of collecting the delinquent taxes, it's a nightmare, collecting all the occupational assessment taxes, There's a lot of people who get taxed for it that shouldn't, there's a lot of people who should but don't. And, we're doing our best every year to keep up with it, but I think it's something they would call a nuisance tax for the.
What is the percentage of income from that occupational tax?
It's about $4 million. Yeah, and that was last year. So it's not, and it's not something that's increasing, it's like up and down.
And your earned income taxes, what number is that?
I think I budgeted for, last year we budgeted, for the current year we budgeted 20 million, for next year we're budgeting 21 million. And that's based on averages of what we've been collecting. So, that is increasing from year to year. So that does help, but it doesn't, it's not keeping up with inflation.
What's the referendum that failed? What was the exact thing that it was proposing?
I'm sorry?
The referendum that failed twice, right? You said,
Yeah,
what was the referendum exactly? What did it say?
It was on the occupational tax.
yeah,
It was on
Yeah,
the
but what did it
occupational
say?
assessment tax.
To increase the occupational?
to increase the earned income tax by an amount to make up, to basically, I don't know what the exact wording, I should say, I don't know what the exact wording was on, this is like, I think it was 2014, was the last time it was tried. Part of the problem with these referendums though is, we're not allowed to go out and say, and campaign for it, but
Right.
people who don't want it can. or people that want it can, but
But
we're not
the
allowed.
people that vote for it are the people whose tax will increase if they say yes, right?
Some of
There you
them.
go, that's why referendums don't pass.
Retired person,
Majority have their
no.
tax increase.
But someone who's working and makes a lot of money would, they can pay, $300 for an occupational assessment tax or pay an additional 0.2% on all their income. There's a big difference there, so.
Good luck with your local government convincing.
Okay?
Thanks.
Yep.
That's a good point.
And then occupation assessment tax, and went over most of this. Based on the job title of the taxpayer, flat amount for different job titles regardless of income. Rates were set by Bucks County. I don't think we're allowed to replace them. Can be replaced by an additional earned income tax by voter referendum. Again, we have control over collecting it. We don't have control over how much we get from it. I will say, if I don't mention who collects the tax, assume that it's the local tax collector. I only talk about the ones that aren't collected by the local tax collector. There's other taxes that we have. These are less revenue, but they're important nonetheless. The local services tax, that's a tax on people who work in the district, split with the municipalities. Different municipalities have different rates, but that's collected by Keystone Collections Group. I think it's like split 50-50, and it's a $52 per worker tax. Delinquent real estate, those are real estate taxes not paid by December 31st for the year due. Those are collected by Portnoy Law Associates, LTD. Interim real estate tax, that's the tax on change of assessments that occur during the year. Someone puts an addition on their house, their assessed value increases. When their assessed value increases, that's why they want you to do a permit when you do work on your house, so that they can change your assessed value and increase your taxes. The delinquent earned income tax, that's earned income tax not collected by the end of the calendar year. That's also collected by the Keystone Collections Group. And delinquent occupation assessment tax is not paid by June 30th of each year. That's collected by a company called G.H. Harris. They've been doing it for us for a long time. And again, we have little to no control over these revenues. We get what we can. The delinquent taxes, we can file liens, sometimes it goes long and properties go up for sheriff's sale, which, I just approved the other day. But, we have to, that's the extent of our control. Return on investment. So we've been talking about this a lot prior to 21-22. There was very little revenue earned from return on investment, and I'd even say there were years where, because of the value of some of our investments, they showed up as paper losses, and we eventually recovered that in the following years. But there were years where you would see losses where interest was less than the value of the investments dropped. In 22, 23, and 23, 24, they've exceeded the budget amount by significant amounts. In 24, 25, we're budgeting for $5.5 million. We're expecting in the current year to finish with close to $7 million. I worked with Kevin Karpik from Cornerstone to determine what we think is a fair budget number for next year. So that's not just me, that's some consultation on that, and that's where we're going to stay with that budget amount for next year. I know it's not as much as we're getting this year, but we can't be we're trying to be conservative and don't want to be overzealous.
Oh, that's amazing.
This is you're telling us that this is a conservative.
Yes. And we do have some control over this, but should investment returns decrease at 21-22 levels, where we're not really getting anything, we're going to lose any control that we have right now. We are doing everything we can to safely maximize our investments this year. And I think we've done well with that, and we'll continue to do that program. State revenues, basic education funding, these are referred to often as the 7,000s in the budget system. Basic education funding, special education funding, retirement reimbursement, Social Security tax reimbursement, transportation subsidies, state property tax reduction, and debt reimbursement. Sorry. Basic education funding, that's probably one of our two largest state revenues. The Pennsylvania budget's basic education amount for the entire Commonwealth. And then each district gets a portion on several factors. There's a formula, including, and some of those factors are wealth and population density. There was a recent lawsuit in the Commonwealth that the current allocation of basic education funding is not equitable and it is not constitutional. So they put together a committee to come up with ways to fix the situation. And one of the things that they came up with is this additional funding for districts. And if a district has spending per student that is less than the amount spent in districts where per student where where they're doing well in in meeting or exceeding standards, we do not qualify for this. We are spending more than I think it's about $14,000 per student, and we are exceeding that. And again, we have no control over this revenue. It's entirely formula. It's based on what the governor and the legislature decide the amount's going to be in the budget and what our formula gives us. And right now, it's about a $1 million increase is predicted for us for next year. Yes, Mr. Hickey?
Fourth bullet, where it says additional funding, which means we're not getting less.
We're not getting less, but we're not getting this additional funding.
Yeah, I know we don't qualify, but I just wanted to, I know that there's been talk that they're taking away from some of the districts that do well, but we are not losing any funding. We're just not getting any additional funding.
We're getting a little additional funding, but we're not getting much additional funding. There are some districts that'll get, if this goes through the way it is, a lot more.
Oh, that's why the district down the road.
That's why I say, I even though there's predicting a $1 million increase, I don't want to budget that because by July, after our budget's out, it could be lost, and now we've got a deficit in our basic education funding. Okay?
Super, thank you.
Special education funding, similar process and formula as basic education funding, except number and severity of special education students is factored into the formula. The revenue has to be used in the special education program, of course, and no control. The state sets the amount, and then the formula says how much of that amount you get. Retirement reimbursement, Pennsylvania reimburses the district for 50% of the employer portion of retirement system contributions. Again, the employer portion for 24-25 is $33.9 million, or 33.9% of salaries paid. So our control over this is basically when we add new positions, it's factored into the calculation. So that $77,000 amount that I gave you earlier for a new teacher, that includes, obviously when we budgeted for it, we would budget for the full $105,000, including all their benefits, or $91,000, I'm sorry. A master's teacher, a new master's teacher would be $101,000. But then we take out the portion. When we actually budget for it, we would have both of those things in there, but they offset when we're talking about adding a position. So a new position for a bachelor's teacher would actually be $91,000, but we get 50% of what we pay for their retirement. And that's really the biggest benefit cost that we have going in is that 33.9%. And similarly, we have the Social Security reimbursement. We get also from the state, we get 50% of the employer portion of Social Security and Medicare. So the employer portion of Social Security and Medicare is 7.65% total. And again, we control it when we add positions, but we do factor it into the calculation of new and replacement positions when we're, saying what the final, not the actual net expense would be for adding a position of a teacher. Transportation subsidy, again, Pennsylvania reimburses the district for a portion of transportation costs. The transportation is based on a formula, and we have, other than, our transportation expenses, we don't have much control over this revenue. And I think it's a year behind, so we'll file all our reports for this year, and our reimbursement next year will be based on those reports. So it does increase with, as we have a contract that increases, it does increase with that. State property tax reduction, this is funding that we get, but it's not really for the district. They provide funding to reduce property taxes for taxpayers with homestead and farmstead exemptions. Then we take that amount, how many of taxpayers have those exemptions, and they divide it by that number, and each tax bill then gets that removed from their tax bill. We have to then reduce our budgeted tax revenues by that same amount, so we're not getting any additional funding with this. We're collecting less from the real estate taxpayers, and we're getting it from the state. So really the benefit is for the taxpayers.
Just a quick question on the tax reduction. I think last year was the first year, and I believe it was Mr. Hidalgo that initially introduced it, but if not, the senior rebate, I know that's something we have to reapply for every year. Is it something where?
You don't have to reapply for it, you just
don't
have to approve it.
You have to prove it every year. Okay, and that's
Yeah.
part of that, okay.
And that's I think we've paid out about $50,000 so far in rebates.
It's small, but.
We budgeted 250, but based on the numbers, but there have been a lot of seniors who have applied, so hopefully that word will keep spreading.
And correct me if I'm wrong, but while we're talking about that, we can't adjust the numbers in that, right? We can?
You can adjust.
I thought it was
So
so
it's at 75% of what they get from the state. You can adjust that up to 100% of what they get from the state, so.
So are we following that same process? Does the state increase their maximum from
Oh, yeah, we will,
650 to
yes.
1,000?
That's a great point. We will be, the proposal I'll put together for the,
Rebate.
for the rebate for next year it is, again, matching what the state, and so those numbers have increased, our rebate will increase by that amount. And so that's what our rebate will be based on. There's a sliding percentage of that rebate that you give out. So right now, it's 75%. The reason I proposed that last year was because it was the first year to see how it went. In the future, we can increase that up to 100%. So we would match the state rebate.
Okay, thank you.
You're welcome. Debt reimbursement. So the Commonwealth provides a reimbursement for debt payments on construction bonds. This program is closed right now, so there's any new debt that we do doesn't qualify, but we do have a few. We get about $1 million a year right now in debt reimbursement from this. We're still working on with the state. There's some old debt that has money that is owed to the district from this program. It never got closed out, so we're working on getting them closed out and bringing that in, but that's going to be a one-time thing, so it's not. And probably would recommend that go to the construction fund for future construction projects. But as older debt is paid off, this amount's going to dwindle. For instance, we were at $1.4 million in the current year. We're down to $1 million this year because we have 2 debt issuances that we're receiving money in this program that get paid off this year. So.
Pretty bad.
So then the next thing is federal revenues, the 8,000 section, the title programs, IDEA, Access, and ESSER. First one, the title programs. There are 4 title programs that Council Rock participates in. The Title I, Educational Assistance for Schools with Low-Income Students. We have a couple of elementary schools that qualify. Title II, Assistance for Teacher and Principal Training. Title III, Assistance for Schools to provide English language instruction. Title IV is assistance to increase capacity of schools to make schools better. Again, they're all determined by the state, it's federal money, but it's passed through the Commonwealth, and they determine by formula the amount that each district gets. We have little to no control over this revenue.
Can you explain Title IV again? What is that?
It's like, it's really vague. It's basically money that you can use to expand your program.
So like, any programs, like if we wanted to expand kindergarten, could we use that money?
You could, but you'd be robbing Peter to pay Paul, and we already use that for, certain teachers and stuff like that, so we'd have to get that same money from somewhere else, so it would be the same.
The pot's only so big.
Yeah. Any other questions on title program? IDEA program, that's assistance for the special education program. Again, this is federal money, but it's passed through the Bucks County Intermediate Unit. It's determined by formula, and obviously all these revenues have to be used in the special education program. I know from my days as an auditor, one of the tests of this program is you have to look at the amount that you spend on special education without this grant, and compare it to last year, and if the amount that you spent on special education, not including this grant, went down, then you are in violation of the program. So, and Council Rock's never been in that position, so we increase our spending on special education every year. Access program is additional special education funding, and this is more like a bank account, where we get a certain amount every year, but we don't have a time frame where we have to spend it. So we kind of like to use this to make up for some special education costs from year to year. So you get like a certain amount in the account every year, and we try to keep a balance in that account just in case we should ever need it. So it's more like. But it fluctuates, but we usually try to keep the same amount in the account and spend around the same, which is about $1.2 million every year.
Are there any restrictions in how that is spent?
Special education.
That's it, other than that? Okay.
And again, it's data driven. But so we can spend how much we spend in a year, but not how much we have overall. The ESSER program, these are numerous programs providing funding for COVID-19, passed through the Commonwealth. Any grants that we have, the last grant that we have in this program, the funding expires at the end, in September of 2024. By the end of this school year, we will have spent all of our funding, so we're not losing anything. But I want to make it clear that all employee expenditures paid for with these funds are included in the 24-25 budget. So we're not reducing, not planning to reduce the services that we were providing, that we were using ESSER money for.
So you're saying that like Nights for Knowledge or whatever that we used, that's continuing in this budget?
That's the plan.
Okay.
And well, it's the majority of the funding that we were using was for
Teacher salaries.
teacher salaries, and we're not reducing any of those positions, and not recommending that at all. I'm sorry, any questions on that? Okay. Other financing sources, transfers in, we don't usually have transfers in. So these are things that basically don't belong in the other revenues. They're more related to when getting these other columns in government finance, in government accounting, that are usually related to things that are particular to a government. There are things accounting things that have to be done in government accounting that you don't have to do in like accounting for business. And this is a lot of those things, like the transfers between funds. You don't have funds in a business. We have different funds, so transfers between funds are in there, but we don't. This is the expense side, or the revenue side. We don't usually transfer money into the general fund. And a refund of prior year expenditure for expenditures made in prior year and refunded in current year. it's usually a very small amount, you know, something that we pay for, that just saves us in the auditor's time not having to open up the prior year because we got a refund, especially a small amount. And that's it for the revenues. Any questions before I move on? Expenditures. This will be shorter, I promise. The expenditure functions, I'm just going to talk about this for a second, just to say, I talked about the different, the 6,000 through 9,000 for the revenues, 1,000 through 5,000 are the expenditures, 1,000 are instruction, like 1,100 is regular education, 1,200 is special education, and so forth. 2,000 is support services, that goes from everything to counseling. You know, there's a lot of money spent in schools on education in the 2,000s. It's not just in the 1,000s. 2,000s include my office, buildings, the facilities, other administration offices. Non-instructional services, those are your different activity funds, the 3,000s, the athletic activity funds and just the student activity funds in the 3,000 sections. 4,000s, facilities acquisition, construction, and improvement services. That's usually for the capital projects fund. You don't see a lot of, usually you don't see 4,000 in the general fund. Expenditures. The 5,000s are other expenditures and financing uses. That's, again, things that are particular to governments. One thing I will point out though, there's a refund of prior year expenditures as a revenue. There's also a refund of prior year revenues in the 5,000s. That's where we budget the tax rebate. Because that's, you know, revenue we collected in a prior year and we're refunding. Any questions on this? So then, after you look at the expenditures are broken up into the functions which we just went over. These are the objects, and these are based on what they're being spent on. The first one is based on where they're being spent, or you know what type of expense. These are specifically what we're spending on. What we're spending them on. So 100 objects are personnel services, salaries. The majority of this is based on contracts with employees. We have, and so those are, expenditures that our control over them comes when we negotiate contracts that you negotiate with the employee groups. Personnel services, employee benefits includes healthcare, which is self-funded, and those rates are determined by healthcare trends by a third-party consultant that we talked about, and I'm waiting for those rates. I'm optimistic that we're not going to have an increase in those expenditures out of the general fund. At least not an increase. I'm hoping we can manage to have some sort of a little bit of a decrease, but that depends on what the final numbers come in at. Purchase professional and technical services. These are services provided by a professional, mostly relating to educational consulting work. So those are in the schools. We do have a few professional services, not in the schools, but that's mostly where that is. Purchase property services are services provided by third party related to buildings, janitorial services, snow removal, etc. Those types of things. Other purchase services, that's the catch-all for ones that don't fall in the 300 to 400, such as a third-party food service vendor. I only bring that up because that's the main one that I can think of, but that does not apply to the general fund. That's in its own fund, the third-party food service vendor. Supplies includes equipment that does not meet the requirements of the capitalization policy, such as small furniture, the Chromebooks, the laptops, those types of things are included in that. 700 property purchases that do meet the requirements of the capitalization policy, buildings, large equipment, land. I believe our capitalization threshold right now is 25,000. It's kind of high, but that's how we separate whether it belongs in property or supplies. Other objects and that purchases that do not fall into other groups. So again, there's the catch-all classification. Interest on our debt is something that is that would belong in the 800s. And the 900s would be other uses of funds. Again, those are things that's kind of similar to the 5,000s and the 9,000s, and these are things that are specific to a government. In a business, if they were paying a principal on debt, that would not be considered an expenditure. It would be a reduction of a liability. In governmental accounting, it is an expenditure. So that's why it would be in the 900 section. And transfers again, so the majority of transfers transfer expenditures come out of the general fund. We are budgeted to transfer next year $18.766 million on debt service, to transfer to the debt service fund to make our debt payments for next year. And that's a steady amount that we put in there every year, regardless of what our actual debt payments are. So we keep that level. But, you know, that's where we're at right now with that. And and I believe that's all, unless anybody has any questions.
I know we're self-funded, and I'm just looking at I know working in benefits before, it's a big chunk of your cost, and there's just, I assume you work with a specific broker.
Mm-hmm.
Do we have a consortium that we're in for?
We're not in a
Or
consortium.
anything for,
No,
for the,
we have talked about a consortium. The problem with the consortium is we're a large organization and we do very well with our current setup.
yeah,
A consortium, I can't,
no, sometimes they're not good.
well,
This is true.
we do very well. And if we were in a consortium, we could end up funding.
You pay for others,
other
people's losses.
Other district losses and that, I mean, I would recommend that we stay where we are.
But you have stop,
We have stop
you
loss.
still have to,
We have stop loss insurance, yes, we do.
you still look for those numbers to get better stop loss, and that's based on, that'll be based on what you're actually providing on your
Yes.
benefit side,
Yes,
right?
yes.
But there's usually ways of saving money without cutting your benefits, or sometimes even improving your benefit side.
Okay, because it improves your stop loss, okay.
Mhm.
I will look into that, I will talk to them about that.
Okay, I mean, I don't know if I have a full, whether you have HRAs or HSAs or.
Well, we have we do have the low deductible, the high deductible.
You
High
have
deductible
You have a
plan.
high deductible on it.
Yeah, yeah. And actually, that is our most expensive insurance. Believe it or not, that's the one that costs us the most.
Strange.
Anybody else?
I'll make a comment. I'll just say this is good that for all of us that you did this meeting to go over the particulars of the budget, especially for new board members. I know that this was always like alphabet soup to me when I first met, and I can never get enough of this. So I just thank you for putting this together and giving us this review in time for the budget.
Mr. Hickey?
You said you would make this available to us.
Yeah.
By email, whatever.
Yeah, I can email it out, or have Amy email it out.
Yeah, that'd be great. Thanks.
I have a question for Dr. Senko, I think. Dr. Senko, he mentioned school resource officers in the middle schools. What else is the administration asking for? What else is significantly different from last year?
So we did, in what Tony just presented to you, we have resource officers built in to this budget. Aside from that, we are working on grants, hopefully to offset that cost if it does become a reality. There are a host of other spots that we would like to consider. We're not ready to say publicly where they are because we know we have the work going forward with full day kindergarten. And at a recent meeting, Nicole shared with you and Jess shared with you some of the numbers. So internally, we're trying to work through that and prioritize some of the things that we think would benefit the district by way of positions and staff.
Okay, so there'll be another discussion more in depth about that. Okay.
Yes.
Ms. Patty?
So, last year, because the IU offers the consortium to several students, we talked about it. But I don't know if we actually calculated the difference of the cost as we are versus if we join them, because we would have to go through, we have to give them information and then we have to calculate the cost, right?
Yes.
But we haven't really
We
done it.
haven't, we've done that in the past, we didn't do it last year.
Do you know how long ago it was that we did it?
That resource is with the district, so I don't remember when she said it was.
I don't know when that was either, but it predates town.
Yes.
I mean, if it's not such a big deal, we could just go through the exercise. If that's
I will say it will be a significant exercise, a lot of work that we would need to put into that.
Our benefits have not increased, right? The expenses are pretty much the same. I remember last year the budget, they even decreased a little bit, didn't it?
Yeah, that's the national costs, which is what we have to base our expectations for next year on, are increasing, but ours are not increasing at the same rate,
Right.
have even decreased.
We have healthy employees.
And we've done other things, and we talked about this last year where we added a prescription drug benefit program where it reduced our cost and the cost for the employees. So anyone that's on a specialized medication, is automatically enrolled in a program where they, the company that we contract with for this, applies for all the rebates available for that specialty drug. And they, the proportion that covers the copay, prevents the employee from having to pay the copay, and then we get the difference. And that started in January, and we are saving money with that program, on what would, cost us.
And we have also had to use that stop loss that Ms. Stone referred to earlier.
Yes, and our stop loss did increase over last year. The current policy didn't even know. I covered that at a board meeting, but, I would ask if we want to do that, can we wait till like July? Just because of, trying to get the budget done.
Right.
Any ideas how many positions we're absorbing due to the ESSER funds running out? Ballpark.
How about if I give you a range between 6 and 10?
Okay, that's a good range. Ballpark at 8.
6 and 10 is the,
Is that the tech specialist?
No, the nights, you mean things like the evening program? Right.
Personnel that we're now, we're picking up the tab for, which.
but like the night phrenologist and
Night
additional
phrenologist.
personnel.
Correct, no,
Yeah.
that's fine.
Current
No, just a question, it's not an opinion.
Yeah, no, and it's probably about somewhere.
Okay. And that
I know it's at least
is,
6.
and that is factored into this budget, so that would be actually one of the assumptions
Yes,
that we're making.
yes.
Okay.
Any other questions, comments?
Just wondering what we should expect next.
I would say next would be, finishing up the payroll numbers, making sure, tightening up some of the things that are still out there. Like I said, we have some transition positions we need to make sure that we get in the budget. So I would like to get you a book that lists all the departments and, we have narratives that we're trying to put together. We're putting together a book that shows you each school or each department, if it's not in the school, what their budget is and, what they're, we're talking about what they do and so that you have a more detailed budget than the board has gotten before. And, you know, have firmer numbers by next month.
And next month.
Is it possible that that sounds great, thank you. Is it possible that when you do that, you could add like a % increase or decrease or whatever to each description? Like, is this number going up? Is this number going down? Just so we could really have it at that granular level.
It'll be a comparative.
That would be awesome.
So when is open enrollment for, is your fiscal, your health plan year starts September? Is that how?
The health plan year starts in September, yes.
So you have till, you don't have to look at that until June?
Yeah,
You start open enrollment, August.
somewhere around there, yeah.
Yeah.
That's an HR function.
I know.
Where's Rob?
I know you know. My meeting is not my function.
Okay, if there's just nobody else, do we have a motion to close? We don't have public comment, so do we have a motion?
No motion.
No,
We're not even.
Okay, good night, everybody.
night.
Thank you.
Night.
Thank you.
Thank you.
Thanks, Tony. Thank you.